Hello. Okay, okay. Let the rest fine too. Okay. Um, I think one person. Okay, two more people. Let's give them 1 minute to join.
Recording in progress.
So, someone told me that they will be missing. I think they will be missing this session, so I'll be recording it. I'll be recording it. Guys, am I audible enough?
Yeah, you're audible.
Okay, okay. Okay. So we're in day 4, and under this, we will be, sorry guys, 1 minute. Okay, guys, I'm back. So on this is the professional stage, and under this we have entry models, we have price behavior and price delivery. So this is the first thing we'll be doing. Price behavior and price delivery. So price behavior, stock, price behavior. Believe I'm spelled it correctly. Don't know. Price behavior. Price delivery. Okay. So price behavior, as the name implies, is very, very, very important. It's important in the sense that it kind of gives you a view of what the market is likely to do. Okay. So the name says behavior. So how is the market behaving at your POI, point of interest, your structural liquidity, your IDM, which is your inducement? So how is price behaving as price is approaching your inducement? So let's use this for an example. So we have our inducements right about here. Now, if we use this as let's say this is the let's say 15 minutes. So let's make this tick like this. And this, on the other hand, is price. Oh my God, what's fucking wrong with this? Sorry. Okay. So let's say price is going down on now we have something like this. Let's make it 2. Now I want you to see how price reacted, or okay, this is our inducement right here. Now before the inducement, you should watch how price is behaving before your inducement. Now, what is price doing before your inducement? It is like a further confluence on why you should buy after inducement or why you should sell after an inducement. Because we saw price making series of higher highs, higher lows, lower highs, lower lows, lower highs, lower lows. At this point here, price broke this structure, this particular structure. So when price broke this structure, it is an indication that something is happening. And what it is, because we've talked about this from the onset, from the beginning. What is going on is simply this. So we already have smart money traders whom I expect a movement like this. So what they likely, or what they most likely do when price gets to the order block. So let's assume this is the 5-minute time frame. Okay. So what they do is when price gets to their POI, they wait for price to change behavior. Okay. Once they get a break of structure, they wait for price to change behavior and look for a buy. Now, it is this thing that is going on this POI that is actually going on here. Here. So what does it mean? It means that when price broke this structure for the smart money traders, okay, when price broke this structure, they took an entry at the retest of the order block there, or the demand zone there, or the supply zone there. I don't care. Now, when they took this buy, their stop loss is going to be slightly below. Their targets might be at the high. Now, that is the exact thing that is going on here. Because when price got to their POI, they were waiting for change in structure to look for an order block here to buy. So these ones will tell you they are the smart money traders that wait for confirmation. But then at the end of the day, their confirmation is still useless, because when price breaks this structure, for algo traders, we are expecting price behavior. So what is price behavior? This is price behavior. How price behaved before my inducement or after my inducement. So price behavior can form before, just like it formed here. You see, this one was before the inducement, but price behavior can also form after my inducement. Please, if you're following me, say yes. Please be truthful. If you're with me, if you're understanding what I'm doing, please say yes. Okay. 1 yes. 2 yes. Okay.
Yes.
Okay. I think one more person. I'm expecting one more yes. Okay, good. So price behavior can occur before an inducement or after, in this case, an inducement. So just take notes of price behavior when expecting or anticipating an inducement. So let's work with real price action. Okay, so for this case scenario right now here, this price behavior, because we clearly see that this is a price behavior. Firstly, this was the high. Second, low. was grabbed. So for this case, was the price behavior before an inducement or after an inducement? Who can answer that? You can type it if you don't want to talk. Was it after an inducement or before an inducement? Look at it clearly. Was it after an inducement or before an inducement? Okay. Okay. Said after.
Before inducement. And
Okay.
we can use it then after also.
Okay. 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 Well, okay, after. Good. Now, this actually happened after an inducement and also before an inducement, like he said, because let's do 1 minute. When you go to the 1 minute, what you'll be seeing is you have two price delivery. So we already have one here. Okay, we have one here. Okay, and we have this low that was induced. This will be the price delivery on the 1 minute. But when you go to the 3 minutes, I hope you're getting it. Now, look at this. This was the price inducement. This would be before, this can be classified as before the inducement. It's still actually after the inducement. It's still actually because this leg push, it took it out. So if this had happened, if this had happened inside here and the inducement, the delivery, the behavior, which is this push, came outside, then it's a different thing. But this happened after this Algo 2.0 was forming or has formed. Now, these on the 1 minute would definitely, this would be your entry on the 1 minute. This would be your entry on the 1 minute. Now, price will come take you out break even because on the 3 minutes, because on the 3 minutes, we have another price delivery, clearly, as you can see. So you have to be flexible. So when you get to the 1 minute and you see you are already in this trade on the 1 minute and it takes you out break even, you should watch why. When you go to the 3 minutes, you'll see that it is clearly a price behavior on the 3 minutes. So you can enter your buy at this zone. Your buy stop loss can be here or anywhere you choose, and you can write your trade. Okay, guys, I hope you're with me. And I hope I'm recording though. I hope I'm recording. I definitely hope I'm recording.
Yeah, you're recording.
Okay, yeah. Record, you are using enhanced encryption, recording on this computer. Good, I'm recording. So you guys are clear on it, I believe. Price delivery and price behavior. Price behavior. Hope we are clear on price behavior so we can proceed. Hope you are clear on price behavior, guys, so we can proceed. If you're not clear, please type not clear. If you are not clear, type not clear. If you are clear, please type clear. So I will know if I'm to repeat myself again, okay? Clear, okay. Clear, good. Clear, good, awesome. So says higher time frame liquidity taken plus fake chalk, inducement speeds clear. Okay, good. Yeah. So the next one we have is price delivery. So we just talked about price behavior, how price is behaving before our inducement or after our inducement. Now we have price delivery. So let's make this 4 and this leg have to be okay. This should be 2. Good. Now for price delivery, price might be coming back, but after the inducement, you can have something like this. can have your re-entry for your price delivery to complete the algo circle. Now, the difference is very clear. Price behavior and price delivery, their difference is absolutely clear. When price behavior is talking about how price is behaving before your or after your inducement, price delivery is talking about how price, okay, admit this one. Price delivery is talking about how price is behaving after. So when price behavior can either be after an inducement or before an inducement, price delivery is certainly after an inducement. And as you can see, for price delivery, order flow has to change from bearish to bullish on the 1 minute. So order flow was bearish, and price had to properly break 2 levels of structure and provide an entry. This would be your entry. This would be your entry right here for the buy. Okay? If you understood this, it's very, very simple. This is what we do all the time. It's very simple. If you follow me, if you understand this, please say yes so I can proceed. Yes, so I can proceed. Oh, good. Yes, one person has said yes. So if you understand, say yes so I can proceed. So the guy who just joined, okay, he understood as well. Beautiful. Beautiful. So I have 3 yeses, I guess. 3 yeses. One more yes. So I would know everybody is following. Okay, yes. Awesome. Awesome. So I believe this is very clear. Price behavior, price delivery, and we have entry confirmation. Within the algo, we have just 3 entry confirmation. Majorly, you can have other entry confirmations, but when you look at it closely, there are still these 3 entry confirmations. So first and foremost, we have the candle closure. So candle closure, what does candle identify?
Your voice is unclear. It's
Huh?
breaking. Your voice is breaking.
Well, how about now? Is it still breaking?
No. That's a technical problem. I'm.
Okay. You can hear me, right? You can hear me now.
Yeah. Now I can hear you. There was a crackling
Awesome.
sound. Okay.
Okay. So let's use this as an example. This low. Okay. So we have 3 ways to actually enter. So let me just write them down. We have candle closure. We have pin bar. Oh, what am I writing? We have pin bar. We have engulfing candle. So these are the 3. And sometimes you can have both or even all in one candle. So for this entry, how we would have entered, let's go to the 1 minute, sorry. I have to go to the 1 minute for this. Okay. So I'm trying to zoom in properly so I want everyone to get this. So this would have been your first entry. This one here. After this engulfing. After this engulfing, you can choose to enter at the order block of the engulfing or 50% of the engulfing. The 50% will be this. The other block will be this. So if you choose to enter at this engulfing, because price after an inducement, okay, something like this, price here might not provide price behavior. It can maybe provide a delivery for you, but behavior is not compulsory. Okay, just like this entry would be based off the fact that an inducement has occurred. But this second entry now, let's see if we had entered this entry based on this order block, our entry 2.5 pips, you see it would have taken us out So they're taking me out particularly. So my next entry would be based on price delivery now. Would be based, which is this. This would be based on price delivery. And I believe you know where the delivery, price behavior, sorry. And I believe you know where the behavior is coming from. This is where the behavior is coming from. So if this is your price behavior, my entry would be based off either of this criteria, either candle closure. By candle closure, I mean the first bullish candle in this case. This is me looking for buys. So I'll be waiting for the first bullish candle to form. So the first bullish candle to form is my candle closure. That is where I enter off from. The next entry will be based off pin bar. If I find a pin bar at this zone, like this bearish candle here is a pin bar. This bearish candle here is somewhat like a pin bar. So I can enter based off this pin bar. Immediately the pin bar finished forming. Set my stop loss to 2.5. Or I can enter based off the candle closure. Or if I get an engulfing like this, I can enter. So your entries should revolve around these three. So right here on the 3 minutes, when we got a much clearer price behavior, So our entry there here would be based off two things now. First, we have a pin bar. Clearly, we have a pin bar. Oh my God, I deleted. Okay, you understand what I'm saying here. We have a pin bar. We have engulfing. So if I missed this entry on the pin bar, I have an engulfing. Like I said, engulfing, you can enter engulfing as the 50% of the engulfing candle, or you can enter at the refined order block there. But it's best to enter at the 50%, especially when it can take your stop loss. Okay, so here we have two entry criteria. We have three, in fact. First is the pin bar. Let me delete this. This is where I say three of them can happen at a spot. Because first is the pin bar, second is the engulfing, and the engulfing can also be a candle closure because it is the first bullish candle at my point of interest. So you see these two candles forming my three criteria. It is another additional confluence telling me that price is likely to go my direction. Because I've got pin bar, I've got engulfing bar, and I also have my candle closure. This candle is my candle closure, bullish candle closure. Okay, guys, if you're with me, say yes so we can proceed. Just type yes, please, so we can proceed. If you have a question, say you have a question. If you have a question, say you have a question so I can allow you to unmute yourself and talk. Okay, first question, yes, but how do you define price delivery? Okay, let's start with that. Now, okay, I have one more. Okay. You said, but how do you define price delivery in the POI? Okay, let's.
So what I mean is the current POI which you're using for price behavior, price where exactly was the second level break for the price delivery?
This one, this level?
Yeah. So how do you define that as a price delivery entry? Because I only see one.
No. Price behavior. It's behavior, not delivery.
Okay.
Yeah, and let me show you where. Let me show you where. Is it clear to you now? Because this is clearly what happened there.
Yeah, it's clear now.
It's clear now, right?
Yeah.
If this had taken this high, it would have been a different case, but it didn't take this high. Even if it took this high, this is still a valid price behavior, because this was on the 3 minutes. On the 1 minute, we had a different case, but on the 3 minutes, we clearly had this. This was taken, and the low too was taken. So this was a very clean price
I think
behavior.
the low was not taken.
It was taken.
I don't think so because I have backtested the price action yesterday. So
Okay.
maybe price action may change now, but I think
Let's check.
not. Okay,
Let's check another broker. Let's be certain, because on that broker it was taken. So this is the broker I use. So let's be certain. I believe. So I'll zoom it properly. Okay. It's crazy. Okay, I think it was not taken. Okay, let's go to another broker and be certain, because the first one was taken. Let's check here.
Okay, I got your point. We need sweep of the liquidity.
You said?
I got the point. We need sweep of the liquidity.
Yeah. It's
That we call as the fake price behavior and fake of structure inducement as price delivery.
Yes.
Okay.
Yeah. So if this low, right, was not taken, if this low was not taken by this, then this would be price delivery, not price behavior. Okay, but if this low was taken, was taken by this, then this becomes price behavior. I don't know if you understand what I just said now. But on the 3 minutes, we had this. Is exactly what we had. What I thought we had, right? We had a break of structure here, and we had people who put their buy limits here, and their stop loss was below here. Exactly here, this other block, people put their their buy limits, or people bought here, and their stop loss was below here. So what I think, because I was assuming that price took this low. So if price actually took this low, the reason was to grab their stop loss here before we. Okay, but if price, okay, you have a question?
Yeah, I have a question. How do you define price delivery over here exactly in this point? Because the two levels are not broken. Just
Yeah.
give a breakup trend inducement.
Okay, so if I'm waiting for price delivery on the 1 minute, right? Because that is my entry time frame. So I only get 3 minutes when I'm looking for flexibility like this. Now, if I'm waiting for price delivery now, right? It doesn't necessarily need to break two levels of structure. It can just come up here and give me this entry. But for better, because I've backtested it, and I feel like most times what happened is this. So instead of doing this, it ends up doing this. Sometimes, not most times, sorry. So it does this, right? And it comes down. So if you were anticipating this, for a buy, for price delivery, you are likely to get stopped out. Okay? You're likely to get stopped out. But if you actually waited for two levels of structure on the 1 minute to be broken, meaning you waited for this to be broken as well. So you wait for this to be broken. So it's showing you a sign that order flow is changing. So it's likely to provide an entry for you. And with this, when you trade with this, you tend to have few losses. Okay, you tend to reduce the number of losses you have. because it means that you actually waited for order flow, because the order flow, as far as we're concerned, irrespective of the fact that we are actually coming from a order flow that is bearish. Now, before you can say order flow has changed to bullish, you have to wait for order flow to break 2 levels of previous structure and provide an entry for you. Okay? You have to wait for 2 levels. Okay? Sorry, you asked the question? Are you good?
Yeah, understood. Thanks for the explanation. Like,
okay, are you clear? You're certain you're clear?
Yes, I'm clear. I'm clear.
Okay. I think I have one more question there. Yes, was it sweep entry? I don't understand this question. Yes, was it sweep entry? I don't know. I don't understand that very question. Maybe you can express it more for me to understand. That's yeah, Priyanshu. You can express it more. Maybe I will understand.
No. I have asked the question that the wind was not taken, so I was asking that sweep. It was a sweep entry or not? That we have checked now that equal lows were formed and not swept. That question that I was writing in the chat at the time.
Oh,
I was
okay.
asking
So
it was sweep entry or not. Okay.
oh, you were asking what?
I was asking you at the time that it was a sweep entry of price behavior, and we just
Okay.
had talked with her. It's clear.
Since the low wasn't taken, it's price.
Yeah.
That what happened there was price delivery, not price behavior. Then it was price delivery that happened there. Okay,
Oh,
not price behavior. Yeah.
okay.
So can we proceed? Any other question? Please type it so we can talk about it. Because this is very important. You get to use them every day. You see them every day. So I would want you to ask question. Okay, all clear till now? Okay, good. So we can proceed. Good. Awesome. So let's proceed. So we already have candle closure and nothing. We talked about it. You all say you're clear. And then we have session open as entry confluence. We talked about it from the onset. We talked about session open as entry confluence when we were talking about session highs and session lows as liquidity pool. So by session open as entry confluence, we just mean something like this. So when you want to enter, you can actually wait for a session to begin. It can serve as a confluence. Okay, just like this. When you wait for this, on the purple box is the London Open. This is when London session started. As you can see, it's just wicked a little. And if you use this as your entry confluence, after the low has been grabbed, that's after the Asian low has been grabbed, and after this algo has occurred, if you wait for session open as a confluence, you will get a better entry for this trade. Okay. And if you waited again for another entry, this would be your entry. After this low was manipulated, this would be your entry for the buys. So you can actually choose. Do you want to enter aggressively, or you want to wait for order flow to show you what it's going to do so you can enter? So anyone. Okay. So this is what session open as extra confluence is talking about. So when you are in New York, when New York starts, you can actually wait for New York session. You can actually wait for New York session to grab either London high or London low in line with your algo. Remember, you can't trade session open alone. You have to trade it in line with the algo. So you have to trade it with what algo is saying. So what is the algo saying? As my high been grabbed, now that is when you now join it as additional confluence to trade your session open. So for this now, clearly we had this low. So we now waited for extra confluence. We had our algo already. This was our algo. So we only waited for London Open. London Open came as an additional confluence to take this buy to the upside. So I cannot just trade. If this algo was not present, I won't take this trade. If this algo was not here, if I wasn't seeing this as algo, I won't take this trade, this buy, because I am just saying London session as confluence. No, it has to be in line with algo. This is subjective and this is objective. This is what is objective. I'm trading this as a subjective reason for this, not because I can't trade this alone. I have to trade it in line with this. Okay. So next is same way I just talked about the Asian low on the London Open as confluence, the Frankfurt Open, the New York Open as confluence can also be there. Frankfurt Open, sometimes Frankfurt grabs Asian low and it doesn't even wait for London to grab the Asian low. So most times you just see that Frankfurt, this is Frankfurt, this gap between this Asian session and this London session is Frankfurt. So most times what you see is after Frankfurt has started, it grabs the low and it moves up without waiting for London session to grab the low or grab the high. So I hope that is clear and no question. Then the next thing is order flow. Very, very important. Very, very, very important. Very important. So this is how you, let me remove this. So before I go into that, what is order flow? First question is, what is order flow? Then we have fractality of order flow. We have choosing order flow. So let's start with what is order flow. Order flow is basically where price or where the major moves are heading to. So when you look at this price action, just from here, you will clearly see that the order flow is clearly bearish. Now, this you can actually visualize it in terms of trend, but clearly this is a bearish order flow, and this is the 15-minute time frame. Now, how do you classify that this is a bearish order flow? You look at where the big candles are forming. Are they forming bullishly or bearishly? So when you look at it from here, you have these big bullish candles and you have this small retracement. You have this big, you see the major moves are going down. So when you're not with the order flow, you can, when you are against the order flow, you keep having stop losses and lots of break evens. So you see the big moves, the big moves, the big moves, the big moves. It's telling you that order flow is bearish. So the only time you classify order flow as being bullish is the same way you classify a trend as being changing. So when a trend is changing, order flow is changing. So once this high was broken, I was also on the 5 minutes anticipating that another high will be broken for me to classify this as a bullish order flow. But for me to properly say this is a bullish order flow, I need to see this high being taken and I need to see big candles forming as it is going. That is where I classify this as a bullish order flow. But for now, we are still bearish on this time frame. Okay, this is the 15 minutes, and this is where fractality of order flow comes in. Let me start again. Let me start again. Let me start from the 1 hour. So clearly, we have a bullish order flow. Okay, but from the onset, we have clearly a bullish order flow. From here, price is moving bullishly, no doubt about it. No doubt about it. But when you zoom in properly, you see at this point, price is now changing hand. Just watch the move. See these big candles and see these mini candles. See these big bearish candles and see these mini candles. So from the 1 hour, order flow has changed to bearish. As far as we are concerned, order flow has changed to bearish. Now that is the 1 hour time frame. Let's go to the 45-minute frame. On the 45 minutes, we are still seeing order flow being bearish. It's still clearly bearish. I don't know if you are disagreeing with me, you can actually type or say something. But so long you're agreeing with me, then let's flow. Let's keep flowing. On the 45 minutes, we have a bearish order flow. Clearly, we have our major moves here. We have our major moves here. Sorry, guys, give me 1 minute. Let me address something. Okay, sorry, I'm back. So, as I was saying, on the what time frame is this? 45, I guess. Okay, good. 45 minutes. Let me be certain. 45 minutes. Okay, good. So when you see from here, you see we have bearish candles forming. This bullish candle could not make any impact. See, the next candle was bearish, big candle. The next candle bullish, the next one bearish, bigger than these ones. When you look at it, the bearish candles, clearly we are in a bearish order flow. Now, it's best to go with the order flow, regardless of your analysis. Once the order flow is against your analysis, then you are practically at the wrong side of the market. So let's go to the 30 minutes and see where order flow is heading to. On the 30 minutes, we still have a bearish order flow. Let's go to the 15 minutes. 15 minutes. Okay, on the 15 minutes, clearly, we still have a bearish order flow. Okay, now let's go to the 5 minute and see. Now on the 5 minutes, the order flow was bearish, but right now we are seeing a change occurring. We are seeing a change occurring. So on the 5 minutes, we had this is the level of structure, and this is the last level of structure as far as I'm concerned. And this is the one following it, this one. So these two level of structure, first one, second one has been grabbed. Now I see order flow changing its hand to a bullish order flow on this particular time frame. Remember, I said on this particular time frame. So when I get this, I can actually be hedging, looking for my buys and looking for my sells. This is where hedging comes in, because I'm most likely going to take this sell, which I did. I also took this sell. I took this buy as well, because I knew that from a higher time frame, the order flow was bearish, but from this time frame, we are bullish. So now we are reacting to price, and price was clearly reacting to this. Clearly, it reacted perfectly to this. So I had reasons to buy. I also had reasons to sell. Order flow was bearish on the 15 to upward, but on the 5 minute now, we are seeing that order flow has been changing. Go to the 3 minutes, it's clear. It's very clear. It's very clear. Order flow is changing. Order flow is changing. So this is how the same way I drew this first level of structure, second level of structure is the same way you wait for order flow to change when you're waiting for a 1 hour inducement. I think we should practicalize this. I don't like drawing. I hate drawings. So let's look for an inducement on the 1 hour. Clearly there should be one. What's this? Let me look for another. Okay, we had this inducement. So let's cut price there. Just cut it and see, because clearly, okay, we had our 1 hour inducement, right? And as the structure was going downward, we had this particular trends coming downward. So structure, order flow was bearish. So if order flow is bearish, I see no reason why I should just jump in the buys. No, you have to wait. You have to wait for order flow to change to bullish. If you don't wait for flow to change to bullish, you have a lot of losses, and you don't need that while trading. So trend was practically like this. We had this, and this. So at this point, We're waiting for two levels of structure to be broken. So we already had one. I took a sell here because we react to price. The fact that price has grabbed the 1 hour liquidity point doesn't mean price will reverse and continue its algo cycle to the upside. No, price is the respecter of no man. So on the 1 minute, I entered the sell. And at the same time, I was anticipating that price will come grab this high and form an inducement for me to enter the buy. So I was waiting for order flow to change. Let's see if order flow actually changed. It never did. Let's see. What happened now is price going down and down, keep going down. So for people who were buying and buying, it took them out break even or losses. So the new structure is this. So we had this. We had this. And we're having this now and this. These are our levels of structure. Let's see. One level of structure has been broken. The next level of structure, I would actually wait for this one. If I get that one or this one here, then I would wait for my inducements. So I've gotten this. So first level of structure was this one. So as you can see, the big candles, see where the big candles are forming now? That's when you know order flow has changed. Second level of structure is this. Now I have gotten my inducements. So now I can just enter. Let's see if we can enter this in the 2 minutes. If it allows. Okay, let's see. 1 minute. I pray it does. Okay, it does. Now, after this inducement, so what entry model? I need someone type this or answer this. What entry, if I'm to enter this buy at this place, what entry model is entry confirmation is this? Is it candle closure? Is it engulfing or pin bar? Please, ASAP, someone answer me. Let me be sure or certain you are following. Okay. Okay. Candle closure. Okay. Two people. Candle close. Anyone else? Well, they are very correct. Candle closure. First bullish candle. So if I'm entering this buy here, my stop loss, let's use 3 pips or 2.5. I don't know. Whoa, news. This would be a beautiful trade, a quick trade. Now I had to wait for order flow. I had to wait for order flow, the 3 minutes or 5 minutes. So I waited for order flow on the 3 minutes to change. So I waited to see the big candles change from bullish and from bearish to bullish. So it started changing and I waited for my inducements. And after the inducement, I got a beautiful entry and it's zoomed off to the upside. So I hope you all are getting the points here. Delete. So what's the next thing? The next thing is I've talked about fractality of order flow. I did. Choosing order flow, I just did. By choosing order flow, you need to know where you're coming from. So if order flow on the 5 minutes has changed to bullish, you know that you're trading it on the 5 minutes. So on the 15 minutes, you can look for possible entries to continue its order flow to its direction. On the 5 minutes, you can still trade it to continue its order flow to its direction. So if order flow has changed on the 5 minutes and has 30 minutes, you can wait for inducement on the 30 minutes to sell and wait for inducement on the 5 minutes to buy, depending on the order flow. If you have a question, please type it. Let me know you all are following. Okay? If you have a question, type it. I'm waiting for your questions, guys. Okay? No question? Is it only the one? I want all of you to reply me. Let me be certain. Yes. You only use IDM, inducement points. Yes, nothing else. No inducements, no entry. No inducements, no entry. If I don't get an inducement, I'm not entering. That is the point. That is what algo is all about. No inducements, no entry. Okay? So no other question, please. Be certain there's no other question, please. Be very certain that there is any other question. Okay, so I can proceed, right? Okay, good. Let me proceed then. The next thing we have is trade management. We are almost done. You see, no big deal. The next one here, this is my trade plan. I'll share it to you when I add it to the group. Here is trade management, risk management, stop losses and profits, break-even rules, pay the trader rules. Finishing up, we have fundamental, trading plan, implementing everything, the top-down analysis. So let's start with the trade management. So let's assume, okay, let me use my trade as an example. I think it would be best to use an example for my trade. Okay, so these were my trades for, I think, last week Wednesday. No mistake. Last week Wednesday, I took this sell. This sell only ran 4 hours, and truth be told, I never took any profit from this because this bullish move was very fast. Now for this buy, this ran up to 7 hours. So at 5 hours, or most times, remember I told you this will be the completion of the algo cycle. So the completion of this algo cycle for this buy, right, provided up to 5 hours for me. It gave me up to 5 hours. So at 5 hours, or the completion of algo cycle, if the completion of the algo cycle can provide up to 5 hours for me, I will partial 70% and let the rest run. So at this point, I partial 70% for this one. For this entry, I partial 70% and I got 1 to 5 hours. So this ran 1 to 7, almost 1 to 8. This, on the other hand, ran 1 to 7 too. This ran 1 to 5. So on this, I took profit because this wasn't the best entry. So I got good entries for this. So on this, I took profits once it got to 5R. But for these two, I took just 70% once it got to 5R. Now, this is how I manage my trades. So on this buy, I took partial. Once it got to R, I took 80% and 70%, sorry. So immediately I took 70%. As you can see, it took me out. And then I took this sell. I was hedging because the buy and the sell were all correct. So for this buy, I was seeing this, right, for the buy. And for the sell, I was seeing 2 levels of structure on the 3-minute broken. So I saw this build up. Now you might be asking, why didn't I take this high for the sell? No, because I told you, once you see a build up, the first leg is your only leg. So I saw this entire trade. That goes as just one push, and I took the sell. So for the sell, I got 1 to 5. I partial out, and then I took this sell too. I got 1 to 5, and then I partial out. So that was it. And I don't know, I think this later took me out. No, I'm still in this with a baby pips, baby lot size. I'm still in this sell from top because I didn't actually expect it to drop this hard, but my rule states that once I have paid myself, so I paid myself 70%. So 30% still running from this, 30% still running from this. So what I did this weekend before the market closed is I closed everything. Because of charges and everything, I don't want them to charge me, so I closed everything. So that's how you manage your trade. Don't be greedy. Take your profits, take your partial, and go. That's how you manage your trade. And the next thing is risk management. Do not over risk. You should have certain plan. I believe everybody here has a certain plan. You know what works for you. You know your psychological level, how strong you are when you're trading. What can you take in trading? Can you take 5 losses in a row? Can you take 3 losses in a row? If you can't, then set your trading plan to be in line with your personality. I'm a kind of person that I can't take 5 losses in a row. I've gone far in trading. I've done a lot, but I just can't help. It messes with my psychology. So what I did was I created a plan, 3 stop losses in a row. I stopped trading for the day. Even if I see my bread and butter set up, I still won't take it. In fact, when I stop trading for the day, I go and watch movies, I play games. I don't do anything regarding trading because I get tempted to want to trade. Because you might now end up seeing a better setup. So what I do is I don't trade. What I do, I don't trade. After I've had 3 stop losses in a row, I stop trading for the day. So don't overrisk. Set your trading plan. After this class, you should go take a trading view. If you have a paid trading view, back test it. No, I'm using 2.5, 3 pips. As you can see, 3 pips, 3 pips. Most of my stops are 3 pips, 3 pips or 2.5, 3 pips. Check for yourself what works for you. Is it 3 pips? Is it 5? Is it 6? Is it 4? When you back test it, check which one works best for you. Your personality and my personality are not the same. We are not the same people. So if 2.5 works for me, 2.5 might not work for you. So you have to check what works best based on your personality. And the next thing, stop loss and take profits. So like I said, your take profits should be the completion of your algo. So if you're entering this buy, or originally your take profit should be here. And it's best when your take profit aligns with your RR, your target. So if your RR for me is 5 and above. So if my RR is, once I get 5R here, I'm okay. I can just close. I can just choose to close up the trade. Once I get 5R, I'm very, very okay. That's how I am. Once I get 5R, I'm okay. So you can choose, okay, 5R, good. Do you want to partial? I don't even advise any of you to partial. Once you get 5R, 7R, or your R, the RR that you anticipate, or the RR that you want based on your trading plan, do not partial, close up the trade, set TP and let it be. Do not partial, close up the trade, set TP and let it be. Now, break-even rules. Break-even rules are very simple. How do I break even? How do I classify a trade as a break-even trade? So let me show you my own break-even rules. So for this buy, I was expecting price. Before I would break even, price has to take this level of structure. So on the 1 minute, the previous level of structure before my entry is where I break even. So once I set my alert here, so once price breaks this high, I take my trades to break even. So if price does not break the high, I don't break even. All my trades, if price does not break the high, I don't break even. You see this trade? I waited for price to take this low before I break even. I waited for it to take this low before I break even. Sometimes there might be a sharp move like this one here, like this move. So waiting for this is too long. You can actually just wait for price to do something like this, to form 2 levels of structure within your entry. So if you enter here, you can wait for price to do this. You shouldn't even wait for it to take this level. So long as it has formed 2 levels of structure and gone down, you should break your trade even. You are good to go. Okay, then the next thing, pay the trader. I've told you, partial or pay the trader. It's best to pay the trader after your algo cycle. So this is where I'm supposed to pay myself. So this was the inducement. This was the inducement, right? This high. My TP was supposed to get. This is where my TP is supposed to be. This is where I'm supposed to pay myself. Don't be greedy. Pay yourself. If you don't want to take your TP out yet, start 50% or 70% of your profit. Okay? This is very serious. I learned this the hard way, so I don't want you guys to be a victim of this. Take your profits when you get to your target. Do not say, I will hedge, I will do this, I will do that. You can actually hedge, take buys and sells like I did here. I was in the buy, I was in the sell. They were all valid. From the 15 minutes, I had my order flow bullish. That's the same thing I was saying then. So from the 15 minutes, you see, This is the 15 minutes. Let me hide this. This is the 15 minutes. This is the reason I took this buy. But from the 3 minutes, order flow has already changed. So that was why I took this sell. You have to react to price. You don't have to just predict alone. You have to react to price. Okay, guys. So if you're following me, say okay. Let me know, because I've been talking since. It seems I've been making noise. Please, if you're following me, type okay. Okay. All right. Awesome. Good. So we have fundamental. I don't trade news, so I don't advise you guys to trade news. The only thing is when I have a big news coming, if I get an entry 15 minutes prior to the news, I was able to like put my stop loss at break even, then I'm fine. Then I'll watch what news does. But when news is going on, I don't trade news. But maybe news is happening in 15 minutes in, I'll go clear entry. I can enter, and when I get a chance to break even, I will break even my trade and allow the rest to run. Just the news what it wants to do. At least you won't take you out. For us, it will take you out break even. Okay. And trading plan, you have to create a trading plan that suits your personality. I have my own trading plan that if you want, I can send it to you, but you have to create yours that suits your personality. You can be using mine, test the strategy, test everything, put everything together, know what works for you, what time frame. Some people 3 minutes as their entry time because the 1 minute is filled with noises and they don't feel comfortable with it. So you should know what works best for you after back testing. That's what you should do. Don't just jump into the live markets. Go and back test these things. What's your winning rate? What's your win rate? How does this thing work? That's how you actually become 1% better every day. Don't jump into the live markets because you just learned this. No, you should go further. Ask yourself questions. What works best for me as a person? I know I'm quick to anger. I'm very emotional. So what kind of trading plan should I create for myself? Okay. Then we have top-down analysis. I don't think there's any need for this because I've done it already. I told you the 1 hour. The 1 hour. When you're doing your top-down analysis, when you have the 1 hour adjustments here, you're expecting this buy. The fact that you're expecting this buy does not mean that on the 3 minutes or on the 5 minutes, the leg coming, that's this leg, does not mean this inducement is not valid. This is very valid because it can just end up flowing to the downside without even minding your analysis. It can just be flowing. So when price is coming from that time frame or order flow, this sell is valid, and the buy as well is valid. But remember, on the 1 hour, before you buy, you'll have to wait for order flow to change because obviously, clearly, the order flow is bearish from this time frame, the entry time frame. So you have to wait on the 3 or 5 minutes for order flow to change. By changing, I mean break 2 levels of structure, this and this, then provide your algo for you to enter. Okay, it's very simple. Keep it this simple. So when you have a 1 hour algo, and you've seen that the algo, the order flow has changed to bullish, you can have more than 6 entry before the end of the day. You can have 2 second entry, you can have this 3rd entry, you can have this 4th entry before the algo even complete. This is 1 entry, this is 2 entry, this is 3 entry, this is 4 entry. Like this is how you enter these things. It's not magic. It's not magic. You have to be patient. Okay. News follow the liquidity. Don't they accelerate the delivery? Well, news. Forget about anybody that tells you that news follows the liquidity. Well, the person has to go back to chart again. The thing is, when it follows the liquidity, people come online and brag and say something like, well, the news goes along with the analysis. But the truth is, the news can do anything. Anything. I'm telling you from my experience. So when all the liquidity, just like this, when all the liquidity, when all of it is down here, or all the liquidity is up here, during news can just not mind the liquidity and go down. It can just keep going up. You can be having a move like this all through London, a move continuation all through New York, and you'll be anticipating for news to come grab all this stuff. And shockingly, the news will keep going up. The news doesn't respect anything. Okay, so anybody that tells you it's just luck. News is pure luck. There's something ICT said of recent. News is luck. It's pure luck. But this trading, there's experience, there is concept, there's ideology. I told you this high for this low to be grabbed. I told you why, the reasons why I expect this low to be grabbed. I told you the people, the different strategies that are trading. I told you why I think this low should be grabbed and why from this grab it should make a new high. But news, nothing. You can only say, okay, there is liquidity below or liquidity above. And at the end of the day, it doesn't even respect it. Okay? So you said you can share your trading plan, and based on that, I will look for mine. Okay? Okay, I'll do that. I'll do that. Actually, it's on the group. My trading plan is clearly on the group. It's no big deal. It's clearly on the group. So any other question before we proceed? Because we are almost done. Let me be certain. But I'm very, very tired. Any other question? If you have a question, please ask it ASAP. Yes. 1 hour, yes. I start from the 1 hour. It's far more clearer for me. So let's say this, I think this is the one. Okay. You see how clearer it looks for me. So when I go to the 4 hours, let me go to the 4 hours. 4 hours too is clearer, but I feel like, see, on the 4 hours now, we are having our inducements on the 4 hours. So it's good to be flexible. So on the 4 hours, we still have order flow bullish. We still have a bullish order flow on the 4 hours. But on the 1 hour, maybe it's because I'm used to the 1 hour. On the 1 hour, I'm seeing a clear change in order flow, a clear change in order flow on the 1 hour. So I'll wait. And it's corresponding to this 1 hour too is the same with the 4 hours. So I can actually tell you that this is my high, and this is my low, and this is my high. And I'm getting my inducements here, and I'm expecting my algo cycle to complete. It's very, very possible too. So it's the same thing. Okay. Any other question? You have a question? I'm waiting. Okay, this is my trading plan actually. And my trading plan, okay, if price delivery or price behavior forms on IPA, do you take trade? Yes. IPA, you mean inefficient price action, if I'm not mistaken. Without wait. Do you, it's okay. If price delivery and or price behavior forms on IPA, do you take IPA alone? IPA has to come after inducement. So let me understand. So if I have, this is my IPA. This is inefficient. So if I'm expecting this low to be induced, and I'm getting my price behavior in line with my IPA turn EPA, because this was inefficient, but once price gets here, it becomes efficient. So I will take this trade, definitely, but it has to come after inducement. Okay, you say you understood. Perfect. Any other question, guys? So this is my trading plan. And I said my trading plan comprises of why I am trading. And I recognize that trading is one. I'll send you guys this stuff. It's my goals, my pre-market routine, my post-market routine, my discipline and mindset in trading, my golden rules. And the next is what my trading, how I actually trade, how I do my top down. All I'll send in the group when you've been added to the group. I'll add you guys to the group tomorrow or next tomorrow. No, it has to be before Monday. I'll add you guys to the group, okay? So any other question? If no question, just type no. Okay. What if the high or low gets manipulated and does not have an inducement? Do you trade? There is no inducement. The fact that the high or a low has been manipulated means the first question is it a structural high? So if these are highs and lows, so if this high should get, if this low should get induced, this is inducement. So I don't really understand your question. You say, what if a high or low gets manipulated? Now, this is the manipulation. I don't know how an high and low or high or low can be manipulated if not through this. And this is what we call IDM. This is inducement. So I don't know if I'm the one not getting the question correctly, but the question states that what if a high, okay, you understood, right? Okay, awesome. Any other question, guys? More question, please. Okay, I'll assume everybody is good. The last thing here is psychology. The truth is, I don't actually, even with my students, I don't do this because this has to be, nobody can teach you psychology. You will learn psychology yourself. You will learn psychology yourself. You see greed, you will overcome it yourself. The only thing I can do is if you're having a hard time, a difficult time, you feel like you need someone to talk to, I'm here and I'll tell you, I'll share with you my experience and I'll tell you what to do. But at the end of the day, it is your choice. It is your choice. So I'm not going to touch this. I'm not going to touch this. I'm waiting for more questions if you have questions. So there's something I didn't say, which is, I think this is the 4 hours, right? Let me go to a different broker. Okay, so this is the 4-hour time frame. So we had a lot of people, a lot of us started getting in these cells from top here. You might be asking yourself, how did we get the cell from top there? This is the 4 hours. I just cut it. So what we did was to wait for, we waited for price to change order flow. Now we know we were counter trending, but at the same time, we knew that if order flow should change, it means trend has changed. So we waited. I waited for this on the 3 minutes, and I waited for this as well. And I waited for inducements, which was this inducement here. And I got in this cell, and I'm still riding this cell. Okay, I closed it yesterday, but it was a good sell. So you can be bullish and go to the 5-3 minutes, wait for change in order flow, and counter trend it. Okay. You said it was SMT, Smart Money Trap on daily, that caused the sell. Well, you see, that's the problem with me. I don't go to the daily actually, because there's nothing I am seeing here. Can you highlight the SMT, Smart Money Trap? Oh, okay. So how about this? How about this one? How about this one? Because these two, like you said, I can decide to use it as a confluence. Yes, good. But you have to react. I can't remember the last time I went through this price action from this place, because it's not that relevant to me. It's not that relevant. This is the relevant price action. Price can react to this, and someone somewhere will tell you there's a hidden order block. Meanwhile, price just reacted, just went there and just came down. Nothing special. Nothing special. Far up the range, forget about it. Keep reacting to price. Because there are lots of people that swore that they were so certain that price must. Okay. Do you plan your day based on Asian session? No. No, I don't. During Asian session, like 1 hour before New York, during Frankfurt, that is when I come. But before let's say tomorrow is Monday. So before Monday, I already mark out my highs and lows. I already did my analysis. So definitely the price might have gone a long way. So when I wake up in Frankfurt session, what I do is I now see what I need to edit, what I need to but I don't plan my trade based off Asian session. No, it's never based off Asian session. I react to price. I don't care about Asian session. Asian session is further confluence, but my trade is based off algo. Okay. Any other question? Okay, man, no problem. Federico, no problem, bro. So, any other question? Which POI to mark? Okay, this is a good question. Very good question. Okay, Federico, you're clear, right? At Altaf Khan. Okay, which POI to mark? Actually, sometimes you don't actually get a POI, especially on the 5 minutes. Like when you're looking for inducement on the 5 minutes, you can actually mark a lot of POIs. Now, like I said, let's go to the 15 minutes here. On the 15 minutes, this is clearly our order block. On the 30 minutes, I'm just drawing POIs for you. Clearly, the same thing. Let's go to the 45 minutes. Exactly. You see? You see the POIs. The problem with people is they over-refine. So let's assume that I'm on the 5 minutes and I'm looking for my POI for this cell. I'm looking for my POI for this cell. People tend to go to the 15 or that's in 5 minutes and mark. I think that's the first thing we dealt with, and mark this out, expecting it to come here. It's good to expect, but it's better to react. Expecting is different from reaction. So when you go to the 15 minutes, you'll see that the order block is not really clear. The order block should be this week on the 15 minutes. On the 30 minutes, the order block is quite different on the 30 minutes. But on the 45 minutes, it's clear. This is the order block, and it's clearly reacted to the order block. So on the 1 minute, once price gets to your order block, POI, you can jump in yourself. You can jump in yourself. Price can go up further to react to the refined zone, yes, but it's best to react to price than to predict price. Okay, so reacting here will give you a good entry to ride this sell. Okay, any other question? Any other question, guys? No, I don't. I don't. People do mark unmitigated weeks, but I don't. I actually don't. It's not in my. You can actually do that. I'm not against it. You can do that actually, but I don't. I don't mark it. I don't mark it, but you can do that. I don't mark unmitigated weeks. Yeah, true. No questions as for now, but we can ask you in future. Absolutely. If you can request for a Zoom call with me, and I will never decline unless I'm busy. And even if I'm busy, I'll give you a day. So when you have further questions, maybe when you're back testing, you observe something, you can ask me, or you can request for a Zoom session and we will do it. Okay. Yes, I will add you to the group. I will add you to the group today or tomorrow. Okay. I just opened the group. I don't normally do a community. My mentorship was based off one-on-one. But I started the group on Friday. So I need to talk to my students and get them a little bit accustomed to group life, because some of them, most of them actually, and not everybody or not all my students agreed to join the group, because some of my students also teach. So it's quite embarrassing to see someone that teaches on Instagram, be in the group. So they don't want to be seen. So not everybody is on the group, but the few that are on the group, I'll join you together with them today or tomorrow. Okay? No questions again, right? Please type no if you don't have any question. Okay. And what do you advise if someone is doing 9 to 5 job? What time frame should they use? If you're doing 9 to 5 job, meaning you go to work and come back in the evening, that means you'll be trading at work. When you're trading at work, I think algo trading the algo is good. So you can actually just take in 1 or 2 or 3 trades and just rest for the day. You don't have to take much trades. I have someone that trades just on Tuesdays because that's when he's off at work, and I have someone that trades just on Fridays because that's when he's off. Just Fridays, and they're all good. So you just have to, when you start, you will never know you're ready until you start. You have to take the bold step, and that's when you know if you're ready or not. So when you start, this is Federico, I assume. Okay, no, it's Adam Khan. This is your question. So when you start, and you encounter a problem, you can come meet me. I'm also a student. I go to school and I still trade. So it's not easy, but for the time frame to use, you can use the normal time frame, but because you're busy, you can use 3 minutes for your entry. Okay, and not necessarily use tight stop losses like 2.5. Okay, but at the same time, first back test. That is the importance. That's the reason for back testing. So when you're back testing, you will know what suits your kind of person. So if you're walking, you don't have to be on your screen every 15 minutes, every 5 minutes. So you can choose to enter on the 3 minutes and use the 8 pip stop loss. You can choose to enter on the 5 minutes, depending on what you choose. And then your targets will be short because you're not going to be watching it. You can just target 1 to 3, 1 to 4, 1 to 5. You just choose something that suits you. Okay? Okay, good. So I'll end the session now. You guys have a nice day, and thank you very much for attending. Okay? Yeah, God bless you, bro. Thank you very much. Thank you, Adam Khan. Thank you. I appreciate